Hey everybody, this is Jim at SP500chart.com. It is Saturday, March 8th, 2014, and we're going to take a look at the week that ended March 7th. We're going to take a look at what happened yesterday, and we're going to do our weekly review. So before I get started, let me remind you that the website and this video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Okay, we're starting out here looking at a 15-minute chart, and there are a couple things that I think we need to kind of highlight here. There are a couple things too I can sort of get rid of. I don't want to kill too many lines, however. Perhaps the most important thing on this chart is our neckline right here. From our truncated inverted head and shoulders pattern. Here it is, left shoulder, head, little short right shoulder, and now we're up above this line. That line should be considered fairly strong support. Pretty much for the past almost 3 weeks, we've been trading in between what is now appears to be a fairly easygoing channel between this support line down here and resistance right here. Tuesday, Wednesday, Thursday, and Friday, we stayed right around that line, starting to back off, even though we closed up again on Friday, backing off a little further from that line on Friday. Now, I've got an additional line in this chart right here because we were considering the possibility of something of a wedge-shaped pattern, and that line is probably worth still keeping an eye on because we only spent one day underneath this line, and that was the day when we woke up on Monday and it seemed like everything was going to hell in a handbasket in the Ukraine. What was interesting about that was, you'll remember going into the weekend, and this is where I'll point out a flaw in my analysis. I thought if we got underneath this line, we would likely head back down into the lower 1800s. We got underneath that line on Monday. But examining what took place on Monday, looking at the trading from midday on Friday the 28th through the trading on Monday the 3rd, and what took place late on Monday afternoon, it looked to me as if this was a little reversal pattern setting up, a little inverted head and shoulders. And by golly, that certainly turned out to be a solid call, as Tuesday we rallied up. Now, the question is, why? And to what end? Because now that we're over this neckline, we know that we have a target from our truncated inverted head and shoulders pattern up of about 1958. Well, we don't have to get there in one move. And it could very well be that what we saw here the past 4 days could give way to some weakness. And if it does, as long as we stay above this neckline, then I think that pattern is still alive. So I wouldn't panic. As a matter of fact, there's a decent chance that this neckline also coincides with gap support. So for that reason, I would expect this neckline to hold up. If it doesn't, then we're looking to test some of our support levels down in the lower 1800s. But all in all, it was a pretty decent week, I felt, as far as how you might gauge a weekly review, because really the only call of any consequence was, this looks like this is not the beginning of the end, but rather just a little temporary bottom, and that did end up being the case on Tuesday. The question now is, will we bounce if we come back down to this line? In other words, Was all of this taking place underneath this line due to a sudden onset of the jitters because of what was going on in the Ukraine? Then when we woke up on a Tuesday morning to things not being as bad as we thought, is this just a distant memory? If that's the case, then maybe this support line down here is not as operational as this one, because this one actually served us well for a number of days. So I guess it appears to me like right now we're just kind of meandering around in a sea of support here and resistance here, and I can stretch that out a bit. Here, here, and here. What's going to be interesting is with a target of 1958, going to be real interesting to see if that target can be met, because if it is, it's got to work through some stuff here. Either that, or we're going to be sort of, if you will, somewhat range-bound perhaps, but with an upward bias, to where we end up melting up to that level, but sometime in May. So, guys, that's it. That's your video for the week ending March 7th, 2014. I think we're just kind of in the middle here. Let's see if we come down. Do we bounce, or do we actually end up taking out some of these resistance levels to the upside? If so, that'll be very interesting. So we've got a target, but we've got a lot to work through before we can get there. So, like I said, interesting days ahead. Hey, thanks for watching. Thanks for your support. Take care.